Morning, Steve Freeman in Chicago with the morning grain comments. Well, it's Friday. The rains have kind of moved across much of the U.S. Midwest, especially the southern Midwest. And overnight, beans are a little bit lower. Corn and wheat's unchanged. For the week, we've been down, I think, in the beans because of just the overall weight of the global supply on the marketplace. It's interesting that from the top of the market, 1080, down to this 939 level in May beans, we've seen open interest go up. So it would suggest that not only is the market getting out of the long positions, but it also might be going short. We also heard this week that China may have stepped up and bought about 10 to 15 cargoes of Brazilian beans. Again, this is the time of year when they buy from Brazil, and I think that they were negative, and I think that their crush margins were negative, and I think they were waiting for lower prices to do some pricing. It still doesn't suggest how much demand they're going to do and how Brazil's going to perform, but it does offer resistance to the marketplace, despite this week U.S. soybean export sales being better than expected. Over in the corn market, again, open interest continues to go up as prices go a little bit lower. We might be stuck in a trading range and thereby market between 360 and 380. It's kind of hard to break down below the 360 area very much because the farmers aren't selling a lot, and we really don't know too much about the summer weather. And it's hard to trade over 380 because the farmer has a lot of corn from last year still to sell, and a normal crop year could add to the carryout here in the United States. And the same thing is kind of in the wheat market. We're in a trading range. Open interest keeps going up. I think the funds use the wheat market as a hedge against any long positions they may have. And right now there's no real weather issues after the recent rains in the southern plains. The only thing we'll be watching for is just down the road if there's going to be some dryness in Europe and Russia, and also if there's going to be too much rain across the southern part of the U.S. Midwest. As far as the outside markets are concerned, you've got stock market up, dollar up, and gold up. And it's kind of interesting in that the market is kind of waiting the results of the recent attacks on Syria, waiting the results of the meeting between U.S. and China, and watching to see if confirmation of the new Chief Justice has any impact once they establish this nuclear vote, in which now anything that goes through the Senate only needs a majority vote. So all in all, it seems like the beans need to go a little bit lower because of too much global supply. Corn and wheat's in a trading range till we know more about weather. We also have the USDA report coming up in which the average guess is a slight increase in 16, 17 U.S. corn, soybean, and wheat carryouts. And it'll be until May until we see what they say about 17 and 18. But for the most part, even though we got lower corn and wheat acres, we're looking for just continued adequate supply. And if the beans go up, 17 and 18 soybean carryout should go up, which should be negative to prices. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.